Thank you so much for your time today, Uchenna. Quite a lot. We've seen that going back and forth between the OPEC and its allies due to that impasse between Saudi Arabia and the United Arab Emirates. Kindly speak to what you see playing out going forward.
Well, Ken, thank you for having me. Well, I'm not really shocked on what is going on right now. Since the beginning of the year, given the fact countries and economies are looking to pre-COVID levels, their economy and business activities are picking up. What we've seen is that we've seen factors sort of segregate or create themselves within the OPEC bloc and OPEC plus, the increase in demand activities and the need to increase their production quota, really. And that's what we are getting to see. Saudi Arabia is being very, very conservative, very cautious, always the big brother, playing the big brother in the bloc. However, some other smaller member countries like UAE, for example, feel they're being cheated. They feel that they've sacrificed so much at the most impact, given the fact that they are not as big as the Saudis, and that's what we are getting to see. I don't expect us to see should I say, a very, very swift solution to this, except there is a compromise from the Saudi side. And again, the other big brother in the bloc, which happens to be Russia, it's not really helping matters. They're just sitting down and folding their hands. As of December, they actually supported UAE's plan to increase production output. So we're in that place where there is going to be factions saying they want more increase in production, and some others saying that, well, we need to still maintain the status quo, given the fact that we're not sure exactly how the end of the year, the end of the year would sort of go on about.
All right, but Uchenna, we've seen the prices lose about $5 since this impasse started on Monday. But I'd like to get an understanding from you. How low do you think this could take prices?
For me, I think it's still early. We are already looking at the possibility that UAE is looking to just go all out and increase its production quota. However, also there's also a political pressure within the United States. Now there's the conversation starting to happen that, well, during the Donald Trump administration, oil prices were quite low. But right now, with Joe Biden, their consumers are facing increased gas prices. So there's the point whereby Washington is trying to step in, sort of keep prices lower. So you have all these variables playing here and there, and I think a plethora of them would literally continue to push oil prices down. Now it's early days, so we can't really say if this is just a correction or we're in the beginning of a downside in oil prices. So for now, I think I would just say to be at a neutral position, really, as regards to oil prices right now, Kenneth.
But let's look at the implications for producers like Nigeria. We've seen the medium-term expenditure framework for Nigeria outlined by the Finance Ministry. They're talking about what the plan for oil in the medium term. Kindly speak to the implications here.
Well, Nigeria is within that fraction looking to increase production quota. We are at a point whereby we believe that we are bleeding through our nose, and you also understand the foreign exchange risk we continually face. Given that double whammy effect in itself, we are at the point whereby we need to increase our production so that we can match out in terms of our medium-term expenditures, as rightly put out in this. So we are at that point whereby we need to match up the inherent market risk we're currently facing, so as to, should I say, not neutralize the current pressure we're facing with exchange rate risk, Kenneth.